A very good evening to each one of you. On behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for this exclusive discussions on compliance issues and budget-related changes. We express our sincere thanks to Mr. Nagendra Kumar, who is the member CBIC. Thank you very much, sir, for accepting our invitation to address at this session. Yes. I won't take that much time, sir. Now I would like to hand over the platform to the chairman of Indirect Taxes Expert Committee, Mr. Badrinath, who is also the partner of CV Devanduni. Over to you, sir. Thank you once again. On behalf of Bangalore Chamber of Industry and Commerce, we acknowledge the support of the following member organizations who are the annual sponsors of the events organized. Bueller, MTR, Sona Group, and Fundamax. Thank you.
Thank you, Rupa. Thanks so much. So, first of all, Nagendra Kumar sir, a very big thank you to kind of participate with us in this discussion. I feel, for want of better words, I put it this way, sir. It's always a privilege. It's very nice to hear you out. And yes, having this interactive session with you, I'm genuinely privileged today. And yes, we have quite a few stalwarts on the discussion, sir. We have Mr. Ramkrishna, Mr. Mohan Sundaram, Mr. Pillai, many more. So it will be a great interaction today. Thank you so much. To all the audience, Mr. DPN needs no introduction. He was very much in our jurisdiction, he was the Principal Chief Commissioner. Now, yes, it's very nice. We feel honored to see him as the member CBIC. Today's discussion, sir, as we had spoken earlier, is broadly to kind of get perspective in terms of the budget-related changes and the compliance aspects, specifically from a GST perspective. So we'll maybe take it up like this. We'll hear you out maybe as you wish your presentation, and then maybe keep it open for the questions.
Yeah, fine. Yeah, that's okay,
fine. Over to you, sir.
Yeah. Thank you, Badri, and good evening to all the participants. In fact, when BCIC asked me that we could have a program to interact with all the members of the Bangalore Chamber of Industry and Commerce and all the other indirect tax professionals, I thought it would be apt that I participate just to explain what are the changes, what we have brought in the budget, and also take the discussions further as to what are the concerns which trade do have, and address them if possible, to the extent possible, or understand at least what exactly the things which we need to take it further on board. As you're all aware, the GST reforms over the past 5 years has seen many phases in its evolution. The year 2017-18, when we introduced this, I think there were some issues on the interruption. My apologies for that. Yeah, I was just mentioning about how we traversed in the last 4.5 years insofar as the adoption of GST is concerned. The second year onwards, I think we started more or less stabilizing into the IT systems, and also saw, I think, a substantial improvement in terms of filings, and also I think the revenue collections marginally going up. The third year, unfortunately, I think when we stuck with this fake invoice and other misuse of facilities by a very minuscule population of the unscrupulous dealers, I think the government had to come down with a lot of corrective measures in terms of bringing more compliance requirements, in terms of enhancing those restrictions. That unfortunately made the genuine taxpayers' life a little difficult. But post-COVID, I think unfortunately the 21-22 and 2021 went through by and large with regard to COVID waves. But post-October 2021, we are seeing now more or less a stable GST regime is something what we are looking at in the future, take it further, and ensure that the GST compliance happens not only in terms of more efficiency, but also with less pain to the taxpayers insofar as meeting those obligations are concerned. Now, if you look at the budget 2022, one of the fundamental guiding principles of the Honorable Finance Minister in presenting this budget is to ensure that stability in tax regime be it on direct taxes or indirect taxes, you didn't see much of big changes coming in. But insofar as the GST law changes are concerned, as you're all aware, that these changes are those which have been brought in pursuant to the decisions taken in 42nd and 43rd and to some extent, 42nd, 43rd and 44th GST Council meetings. Those are the changes which have been introduced in the Finance Bill 2022. Now, the changes introduced are twofold. There are some course correction amendments which has happened. At the same time, I think some of those enablements which were not there, I think for which I think notifications and rules were framed, I think the source legislation has been correctly amended. I understand that there were some network issues. I hope I am now audible. Badri, you can confirm to me, is it audible now?
Yes, sir. You are audible. So maybe you may want to just keep the video for a few minutes. But that will strengthen the.
I think so. The bandwidth is the problem. I'll do that. Okay, right. Okay. Now, the first and the foremost is what I was addressing was with regard to, I think, the changes what we have proposed in persons to the amendments what we have sought in section 16 compared to the section 38 and the subsequent sections. Now, the manner in which the credit will flow into the recipient and the frequency at which it will flow or to the extent to which the credit will flow is basically a provision what we have enabled in the law, not with an intent to ration or to restrict the credit, but to provide the mechanisms by which the safeguards are adequately built in the auto population of the credit flowing from the GSTR 1 to 3B of the taxpayers. Now, we have constantly looking at how do we bring in the supply side discipline. Now, the recipient's credit has been in jeopardy if the supplier is not uploading his invoices in the GSTR 1 properly. Consequent to which, I think, notwithstanding the recipient paying the tax along with the consideration, the credit is disabled on account of the supplier not filing the returns or is not uploading the invoices. Filing the GSTR 1 or filing the 3B. So, to address that discipline in filing of returns on the supplier, we have now brought in this amendment to ensure that they do file the returns in a time-bound manner and also ensure that the recipient credit is not put into jeopardy. You're all aware, I think, in the Finance Bill 2021, we brought in an amendment to the effect that if the GSTR 1 is filed, that tax liability disclosed in the outward supply return would automatically be construed as a self-assessed tax liability, and accordingly, a recovery action could be straightaway taken without recourse to 7374. Now, that has been notified with effect from 1/1/2022, and that itself would bring in a lot of discipline insofar as the supply side filing of return is concerned. Correspondingly, we have also done one more course correction that while there has been a sequential filing of 3B returns, the R1 returns were not required to be filed in a sequential manner. Consequent to which there is a lot of gaps in terms of the R1 and 3B filings. Now, we have made it mandatory now, effective from 1st January, that if you do not file the 3B return for the previous tax period, you cannot file the R1. This again would bring in a discipline on the supplier side insofar as filing of returns are concerned. Our object is only to ensure that the recipient input as credit is not put on account of on the supplier side not filing the return in a proper and timely manner. The third thing what we are looking at is basically, I think when we say the manner and to the manner in the prescribed manner, this will be passed on. Our intention is not to say that we will restrict the credit like 86B. Our objective is to see that to the extent where the tax has been paid or the tax has been disclosed in R1, for which corresponding 3B return has been filed, certainly I think those credits are absolutely going to be 100% ensured. The government is not going to put any restrictions insofar as rationing this credit is concerned. But certainly where somebody has been out and out fraudulently trying to create an audit trail in the GST system by gaming it, by creating a fake transactions and the fake transaction trail, I think certainly the system would be in a position to detect it at the earliest point. And in those cases, and only in those cases, driven by a technology intervention purely based on the risk assessed on account of data analytics, there could be a situation where the flow of the credit could be not given automatically, but it could be put to subject to such conditions as we may come up on a later date. But such a restriction or such a stoppage of flow of the credit would apply only based on a system intervention purely driven by a sound risk rule, which we would come up as the days go by. What we are now doing is only providing an amendment in the source law to provide for such a scenario where there could be a situation where a fraudulent credit is not allowed to be flowed into the recipient side at all. So that's the object for which we have brought in that amendment. So there is no need for the trade to feel apprehensive that we are trying to restrict the flow of the eligible credit to the recipient on account of various considerations other than those what I've explained to you. The second important amendment what we have brought in is to implement the GST Council decision insofar as the interest is concerned. As you're all aware, I think we have brought in first the interest liability from the gross tax to the net tax liability. Now we have given this with the retrospective effect from 1st January 2017. At the simultaneously, we have also reduced the interest from 24% to 18% with the retrospective effect. This is yet another important budgetary changes what we have made insofar as the ease of doing business is concerned. The other changes what we have made are all there in the public domain for all of you to see. These were all the decisions which were taken during the GST Council meetings, which were made known to the trade. Now, what we have done is we have provided for an implementation route in terms of amending the law. Section 49 we have amended to provide for in respect of certain cases where the payment of a part of the liability towards the cash route. What we have proposed is just an enabling power what we have taken in 86B rulemaking power we have provided for in 49. But you are all aware, 86B has been done with a lot of exclusions. It's not as if, 100% ITC utilization cannot happen in a genuine business circumstances. It does happen provided you have zero rated supply or a proportion of an export turnover or an inventory duty structure or even a capital goods credit accumulated on account of the new business coming into existence or expansion. Those are cases where 100% utilization of ITC is inevitable. But what we are looking at in 86B, when we have provided for those restrictions, they were very, very carefully thought through to ensure that only those of them who would like to pass on the fake credit in the supply from the supplier side to the recipient, we just want to put in some sort of a deterrent provision. Section 49 amendment has been basically enabling the power which we have taken in 86B to be provided for in future. But let me assure you that this power will be exercised very, very sparingly, only in respect of a select taxpayers for whom the entire supply chain analysis is being done in the system. How do we do that? If there is no inward supply at all to a person and he is passing on the credit to the supplier on the supplier side, obviously we are in a position to identify these are the people who are not the ones who are normally doing the business, and subject to some verifications and further the data which we could take it from third-party sources, we can identify them and put them into some sort of a risky taxpayer mode and provide for some sort of a mandatory payment of tax in a cash in a proportion to see whether they are actually genuinely existing or they are just trying to game the system. The things what we would at this point of time, I would of course I'll wait for all your comments and views on whatever the compliance what you have doubts and clarification to ask for. The budget what we have made is only, I think, the misconception which if it could be carried in somebody's mind that Section 16 amended with other rules, other sections is not intended for rationing or restricting the credit. I would stop at this point of time, Badri. Only thing that I would request, I think in the QA session, I would take more questions and probably come with more incisive insight into some of the changes what we have brought in. And also we may like to clarify some of the issues what you may have in your mind. Thank you once again for inviting me to be there part of this session. And I look forward to a meaningful interaction with all of you insofar as this important topic is concerned. Thank you.
Thank you, sir. Thank you so much. That was brief, that was concise, and very interesting, I should say. Sir, what I've done is I've got a few questions from the members. So maybe I start with that, sir, if that's okay. Sure. So one is the very most important topic which you briefed us about, which is the input tax credit. Quite a few questions are revolving around this concept of input tax credit. I think somewhere it is the taste rather than the taste. It is like, if I classify the conditions into two different categories as to the conditions that I'm supposed to fulfill to be able to take a credit, I would probably put them into two buckets. One is which is in my control, I can be responsible for it. I mean, it's fine. I fully agree that yes, I am responsible for my actions or inactions. There are some conditions, including what have come as part of the budget, which are more or less actions or inactions of the supplier. Sir, how would we see that I should be held responsible for it? Sir, especially if I go to the proposed amendment in the budget this year, section 16, it says if the supplier is continuously defaulted in payment of tax, I am not going to be allowed credit. If the supplier's 3B has understated in comparison with his 1, I am not going to be eligible for credit. Few more, sir. Maybe some thoughts from you on this aspect. So you're on mute.
Please go ahead. There is some incoming call. Sorry, I think I'll just take it. 1 minute, I'll do that. I'm using my daughter's device. That's why I think this concern is okay. Right.
Sure.
Please go ahead. Yeah.
So maybe hear it from you on those aspects in terms of is it right that I should be responsible for the actions or inactions of my supplier, especially when it comes to filing of returns by him, correctness of the returns that he has filed, and whether he has given tax and those. Would love to hear it from you in terms of how it would all come out.
Yeah, I think, Badri, on this issue, I think we have now traveled fairly a long journey. You see, the original schema in the GST was, I think we used to have a GSTR1 as a liability statement and the GSTR2 as an input tax credit statement computed based on the liability statement of the counterparty dealer. And also the third is the payment return, by which I think after adjusting the ITC eligible and flowing into the credit basket, how much is required to be paid to the cash. That was originally an intended design. That would require a complete end-to-end invoice upload, and also I think validation by the recipient, and thereafterwards given the power of add, amend, alter, annual, or reject. I think if you would have completely updated the ITC with perfection with regard to reversals, etc., then ITC what he declares as what is eligible to him, thereafterwards what he makes the payment in his final payment return. That was ideal situation what we would have thought of. But you're all aware, I think technology did not support the design what we originally envisaged. And by default, by out of practical considerations, we had to go for a summary return in the form of a 3B return. Now, when 3B return was introduced in the very first month of the GST operation, what we have to live with, one of the biggest limitation is the granularity of the information what it could come in 3B return. The R1 return, to the extent possible, has been giving some information with regard to the tax invoice, with regard to the unique identity, the number, the date of generation of the invoice, the consignee details, the tax rate applied, and the quantum of tax, etc., etc. But on the recipient side, once the entire money, the credit, what is accruing on account of the R1 filed by the corresponding supplier, is getting merged into one single basket, that the uniqueness or the identity of that credit gets lost. Now, many people have tried to take advantage out of this and then try to see how best they can game the system. Now, the entire amendment, what we have thought of and what we have brought in, is in a way trying to move towards that direction of ensuring that there is an audit trail with regard to the input as credit, which is generated by a taxable person in the GST system, for which there is an ownership, and there is an ownership which it puts it a sort of an assurance to the recipient that it is happening. Now, you raised the point that, sir, how do I ensure the correctness of the tax assessed by the supplier? And how do I ensure that he has filed the return? And how much of the control I have on such behavior of the supplier part of it? Now, we agree with that the recipient may not be in the best position to control the compliance behavior of a supplier. But we also must know in this entire design that it is none of our case that a credit could be claimed for a transaction which has not resulted in deposit of the corresponding tax liability into the government, be it in the form of a cash deposit or in the form of an offset by a eligible credit in the supply chain. Now we are on the same page, so that both of us are on the same page on that. So far as concerned, it's not your case, and it's not the it's not also the demand of the trade that you give me the credit without even filing a R3B return. The challenge is how does the supplier is compelled to make the 3B return filed. Now, this is where I explained when I gave an introduction in a brief manner that you see, we would like to bring in more of a discipline in filing on the supplier side rather than go after the recipient. Yes, my today's 16(2)(c) also mandates that it is the recovery will happen from the recipient and not from the supplier side. But we had made an attempt by introducing the provisions under Section 43A, which also happened consequent to GST Council decision in the past, that we could recover from the supplier, failing which will come to the recipient, or we would make an effort as much as possible to recover from the supplier. But we didn't have the required mechanics how to go about with that, because of the simple reason that the person who is required to file the return and pay the taxes in respect of an outward supply declared in R1. Basically, it was basically getting into some sort of a tax period specific disclosures happening for which the liability has to be computed. We, as and when the liability got disclosed, either in the subsequent return, the credit flow was automated for that matter. The 2A was dynamic and we were continuously updating on that. But there was always an issue because any given point of time, we would like to get insurance that the credit was available to them and it is admissible to them. Now, that is where we needed to fix that as to what is for a tax period. A taxpayer could be clearly told, this is your eligible ITC for which you can go ahead and offset it against your payment options. Now, the 2B, which we introduced it, and auto-populating into the recipient, which is a sort of a substitution for your GSTR2. I think from last August 2021, now we have more or less stabilized in auto-populating it with, of course, a cutoff date by 13th of this. Now, there is some sort of a discipline has come in so far as that credit entitlement is concerned. What flowed into your 2B? There is absolutely no dispute with regard to that eligibility. Subject, of course, you will be reversing based on your taxable and exempt turnover, etc. But the 2B flows on account of a validation which the system does with regard to the person's outward supply statement uploaded. Now, once a person uploads an outward supply statement, how do I bring him to file the 3B and make him compulsorily own up that liability? That is where we have brought in these changes. I talked about the self-assessed liability. When we introduced this, immediately there was an uproar saying that there could be genuine cases where there could be a mismatch happening between the R1 and 3B because of various reasons. For example, the eligibility to the credit could arise in respect of an invoice raised in the previous tax period for which the goods were received in the current tax period. I could not have taken the credit in the previous tax period because one of the conditions under Section 16 was not only a tax invoice is raised or a return has been filed, but I must also be a recipient of the goods and services.
Yes.
So there are bound to be transitional challenges where there cannot be a 100% matching between an R1 and 3B in any given situation. It is not the business reality. We are fully aware of that. That is why when we add the amendment to the law 7512, we immediately came out with a guideline in the form of an SOP. We said we will give an opportunity for a taxpayer to explain the reasons for the differences that could arise on account of the situation, like what genuine case, what I have talked about the situation. Now, we will also over a period of time provide for in a return how much of those supplies for which a matching could not be done on account of a situation like what I've explained a while ago. Now, today we don't capture that information in the return. Now, going forward, we will have separately a column by which this information for which you will disclose the invoices for which the invoices have been raised by the supplier. It is shown to me, but I am not taking credit in this tax period. I will take it subsequently on fulfillment of the conditions under that. Once that type of a system enable matching happens, even those mismatches could be explained satisfactorily, and there cannot be an issue of a mismatch consequent to which the actions like suspension and all those things would not arise. Now, one, I said self-assessed liability, R1, we have brought in that. Two, we have made it now, previous return you cannot file. without filing, current R1 you cannot file without filing a previous 3B. Now the amendment what we have proposed now is you have to necessarily proceed filing R1 before file your 3. So this will 100% ensure that the credit will come to you only when they file the returns. There will not be any situation where it will not be. Maximum a month's period will come. But in the return enhancement project, what we have taken up, which is going to be put in the public domain shortly, we are coming up with some alterations to the return design. More probably, we will add more enrichment in outward supply return. The outward supply return is the one which is coming with granularity. We would not like to tweak too much of 3B. 3B would be a payment return. So we would like to auto-populate as much information as possible from the supplier side, from the R1, providing all the scenarios. And in 3B, of course, correspondingly, some additional tables will have to be provided where this type of a transition mismatches could happen, which can be explained. Thereby, the credit difference, the difference between the R1 and 3B, for a reason to be explained properly, for the classes or categories of reasons for which the discrepancy could exist for a genuine business consideration, I think our object is not to deny or to dispute or disagree with that type of mismatches. We will look at that, but the amendment what we have brought in today is a broadly worded amendment. We said in such manner, at such prescribed things, to the extent possible, we have said that. But all these things, I think our chairman has gone on record, post-budget, several workshops he has mentioned. All those will be a system-enabled and an highly validated restriction rather than a discretion left to any field officer or a tax officer, be it on state and center. And those will be very, 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 very minuscule population. And we do have the data analytics today to find out who are the people for whom we may have to apply such restrictions. A person who has not filed any return at all, defrauded the government about hundreds of crores, I think none of you will disagree with me that they are the people who need to be thrown out of the system or ejected from the system at the threshold itself. Because all of them are contributing to the complexity in the way in which we want to administer this tax in a simplified manner. Our object is that. So be rest assured, Badri, that the compliance deficiency on the supplier side, in an ideal situation, should not result in any denial of credit to the recipient. But it is also commercially very important that you must know your vendor, what type of a compliance behavior he has, with whom you want to do business. Now, some of you must be saying, sir, in that eventuality, give 149 compliance rating so that I know my vendor properly. We would take a very calibrated approach in doing a rating to a taxpayer because we don't want the government to be seen as a rating agency for somebody whose business could be put into jeopardy if we do even unknowingly something which can commercially affect their things. But GSTN, as far as possible, has made available the filing information of the supplier side, know your vendor, including the discrepancy what you have, you can correspond with that. But we would like to look at that way rather than, look at a rating as an immediate solution for bringing credibility to your supplier side. Yeah. Thank you. I hope I am making it clear. If there are any still members can always feel free to ask about it.
Sir, that one statement from you saying the non-compliance on the supplier should not kind of deny the credit to the recipient in genuine cases was reassuring. And yes, sir, you stole my word. You stole the next question of mine, which is I was planning to ask you about, how would we really look at a compliance rating system? Thank you so much on that. Sir, there is one more question which has come up in very many discussions, pre-budget and post-budget as well, which says if there is a difference between a 2A and a 3B, sir, that condition has come only for the fact that it should be listed in 2A has come from the finance bill of last year, Finance Act of last year, and additional conditions this year, as in the 2A and 2B conditions. Sir, shouldn't this be prospective, or should we expect that the credits will be denied even for 17-18 and 18-19 for any differences between 2A and 3B, sir?
Well, I think, Badri, all the corrections can happen until the filing of the annual return. And after filing of the annual return, you see, I think there is a moratorium with regard to any change in credit entitlement or output tax liability could be changed on that extent. So yes, for the year 17-18, the annual return got filed somewhere in March 2020, and for the 18-19 and 19-20, the period has got over. To that extent, I think reopening the credit eligibility to the past period would not be possible. I think we need to be very clear about and aware of that reality. But the one thing which the GST Council took a decision and we have amended in the current year's budget, you are all aware, The due date for filing the annual return was the month in which the September return was to be filed. That was in October. We have extended it up to 30th November. That is the time with which I think one has to reconcile the books of accounts and do the adjustment entries, whether there is an input tax credit claim or for that matter, output tax liability will have to be discharged with interest, etc., etc. We have provided for. Now, reopening those credits which have been flown into and frozen in terms of the annual returns, the reopening is very unlikely, I would say that.
Okay. 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 Sir, you also mentioned about the due date being extended from 30th September as a due date for filing of a September return to 30th November. How should we read it? But there is some confusion in some parts to say that, return for the month of November or any return filed up to 30th November.
We will come back with that, with the clarification. Our intention is earlier. The annual return filing was, any corrections will have to be done, has to be carried out in the September return. And
Yes.
the return will have to be filed by 31st, by October or whatever the period has been done. Now, here again, to which period you will be carrying out the corrections and bringing out the changes and reconciling the whatever it is, we'll come up with a clear clarification on that. It shouldn't be a matter of worry because that's going to be a future. Good that you raised the point. We will come up with a clarification on that.
Thank you so much, sir. Thank you very much. So one more in the context of input tax only. Maybe then we'll look at what are questions the audience have. Sir, there are pretty many cases where unknowingly, errors have happened while filing the return. As in, it is an SGST and a CGST, it's an intrastate supply, but I've accounted properly in my books. But when I'm populating my 3B and claiming a credit, unfortunately, it has gone as IGST or vice versa. So how do we really correct that so that there is no penal implications on this, sir? Because end of the day, the understanding is that there is no loss to the exchequer in any form or fashion.
The only thing is that, Badri, insofar as a wrong payment, a payment in a wrong head, for example, it has to be a CGST, SGST transaction, but you are treated as an IGST or vice versa and paid the tax. We have provided for refunding the taxes. The correct tax has to be paid, but for the previous period, for the previous tax, whatever you have paid, I think without any time limit, now we have made it eligible to pay that with that. Now, the question comes is with regard to the interest liability part of it. I think so far the understanding is that insofar as whatever tax has been wrongly paid is the one which has already come to the government account, and accordingly that will have to be viewed on that. I would like to refer to the provisions and thereafter give a correct clarification on that. But we have provided for the switchover from the CGST to IGST and IGST to CGST, vice versa. And I think that has been, even the time limit has been removed for that purpose in this amendment. I think the amendments you can go through for that clarity, right?
Sure, sir. Sir, how would we look at it from an input tax point of view? I had purchased certain goods. It was a CGST transaction, but wrongly put it as an IGST credit in my return. How do I, again, without any penal or interest implications, how would you advise?
Basically, all these things, Badri, why we are being very, very, what do I say? We are very, not so flexible in this matter. Everything happens with regard to a fund settlement based on the written disclosure. Now, if your disclosed is an IGST, I would have settled the fund to the destination state based on that principle. If you're going to convert that into a CGST, SGST, automatically the destination state will not get it, but it will be the state of origin where the tax would get paid. Now, this is where we want to be as much cautious about in switch over from IGST to CGST and vice versa. So that is why I think we would advise all the taxpayers to correctly identify the transactions and determine it correctly whether IGST, CGST payable and accordingly pay. Should there be a change in that, immediately pay and seek a refund of that, which we are willing to pay on that part of the campaign immediately. Right.
Understood. Understood. Maybe we'll take a question from Mr. Ravichandra. He has raised his hand. Mr. Ravichandra, you want to please unmute yourself and pose the question?
Yeah.
Rupa, can we unmute Mr. Ravichandra? He has raised his hand.
I have done it, sir.
Okay. Ravi sir, are you there?
Yeah, I'm there. Good afternoon, sir.
Good afternoon, Ravi. Tell me.
Long time.
Yeah, I think so. Yes. Please go ahead, Ravi. Yeah, please go ahead.
I got a couple of things, sir.
Yeah.
In fact, I think we heard you, what I call debating on all those issues. The intention is quite good, but some of the issues are there, glitches are there.
Okay.
Okay, one is the custom session ice gate.
Hmm.
Okay, that is not fully what I call linked with the GST portal, I think, because
What we're talking about is the IGST payment is not flowing into your 2B in a very
correct. Coherent
flawless
manner.
manner.
Some are
Okay.
populated, some are populated 1 month later, some are populated months later.
Yeah, we are aware of this issue. Yeah. Hmm.
So mismatch is there. This is one.
Yeah.
Then supplier invoices also auto-populated in GST2B and pop-up tabular. There are many invoices booked for previous month actually,
Mm-hmm.
but availed in the current month. That shows excess credit in the current month, and scrutiny notices are coming.
Yeah, I think people will be obviously. I think they will be trying to do the mechanical comparison of the R1, the 2B versus your 3B credit what you have taken, and they will say that this credit was not available to you during that period, etc. Okay.
Yeah, I think a lot of mismatches between the credit taken in the purchase register of the company
Right. Mm.
and the GST of what they call 2B.
Okay. Mm. Now,
Then third is
the first issue is consent, Ravi.
yeah.
We are aware of it, and we have been continuously working with GSTN to ensure that the data is pulled in a proper and a timely manner so that the auto crediting of auto population of your 2B with regard to the IGST paid on imports get fetched in a timely manner. I would like to get feedback from the members. I think, Badri, you can just also let know how often and how frequently such uh, errors are occurring with regard to, I think, the IGST flow. One of the large taxpayers in Bangalore did bring it to my notice about a fortnight back, and in that particular case itself, I had brought it to the notice of the CEO of GSTN. He had promised that I think they have fixed this issue to a large extent, and they would be in a position to fix this problem in a satisfactory manner in a short period from now.
Okay.
We would like to have more input on this from your side, but we are aware and we are addressing that, Ravi. All that I can assure you at this point of time is that we are also taking it with our technology partner to see that such glitches do not put additional compliance burden on the taxpayers. Particularly, you are eligible to the credit on the period in which you have taken the credit, but since it did not flow automatically, you have claimed it in 3B, but the mismatch is causing concern in terms of explaining query to the officers. But I would only say that wherever you had the credit accrued to the period in which your IGST payment has been made, I think you must insist upon asserting your right. But for the system glitch, you should not be penalized in terms of the interest or cash reversals, etc. Yeah.
Yeah. Okay, sir. Then a couple of two more questions to the other things are.
All this ASMT10 or any notice of mismatch comes, rest assured that all of them are picked up from the system. And the officers are shown those mismatches summaries, and they're asked to seek clarification from you. So probably the one of the other constraint is you have very short timelines within which the officers are asking you to respond to those mismatches. We are all aware of that, and we are trying to address that concerns as well. Yeah.
So then second is the ITC CGST credit transfer. It is happening only for cash payments, but not for ITC credit. Within what they call one state to another company. It is from the same company.
You want to restart the LTO, Ravi?
Yeah. In fact, I wanted to, the next question was that.
No, I think
That will
I just
pave a
want
long way.
to clarify to all of you. You see, GST brought in a lot of relief to us in terms of subsuming taxes both at the center and the state level. But one fundamental principle which all of us will have to respect and completely adhere to is that it is a subnational level taxation. That means your identity, notwithstanding the fact that you have a present on pan-India basis, in the taxable jurisdiction of each and every state, you have to acknowledge that you have an individual identity. Now, that identity sometimes may cause additional compliance burden. We are not denying that. Now, you've all seen centralized registration of service tax gave some comfort level to you. Today, we cannot think of a centralized registration for the simple reason that every state to the destination principle, we need to have an identity separately because each of the state are equally concerned that the tax revenues to their jurisdiction accrues in terms of the law in complete conformity with that. Now, when we talk about the credit flow, uh, we have taken a decision in the 45th GST Council that yes, insofar as the cash lying in your ledger, the excess cash ledger, we have removed the refund route. We have also permitted you to take the route of transferring it from one registrant to another registrant. It's a some sort of a deposit. It has not been a tax adjusted amount. It is lying in our account. No doubt it has gone into CFI, the Conservative Fund of India, but it is still not yet adjusted against a return file because the tax payment in GST gets triggered only when you file a return. So when that money remains in your excess ledger, it automatically becomes something which we can deal with, and that is how we are permitted at least at the CGST to CGST level. When it comes to the credit distribution can happen only through an ISD. We have provided for it in so far as services, and all of you are very comfortable with it and familiar with it. And it is happening in a very smooth and seamless manner. The month in which you are getting the credit where you want to distribute, you just distribute it. There is nothing which remains in the ledger. As you receive, as you distribute, it becomes that much, the liquidity is possible because you're transferring to the jurisdiction where the credit can be used for payment of outward tax liability. Now, if a credit balance lying in one tax jurisdiction, that is state A, let us say Karnataka, will have to be transferred to, let us say, Maharashtra. Now, it has to be through the distribution route only, and it cannot be a summary transfer like a cash. Because for the credit earned, there is some accounting entry by which a state will be getting compensated when the credit is utilized for payment of tax. For example, if IGST credit is used for payment of SGST, that state will transfer that much of amount which has been used for offsetting the SGST liability to the center and vice versa. Now, that is why I said that the credit cannot be just compared with the cash. And to that extent, the transfer from one jurisdiction to another would be, I think, a big ask at this point of time. But we are aware that this is creating a lot of, what do I say, the accumulation and the blocking of credits in the jurisdictions in which there is no adequate outward tax liability. But insofar as the services are concerned, and to the extent the principle laid down in Section 20, I think the distribution of credit mechanism is one what we would strongly advise. And of course, you have other options to utilize the credit in terms of zero-rated supplies, inverted duty structure. But the credit which accrues to you, which could be refunded at the year of the annual return filed, that we haven't still enabled it. But going forward, we will see how the IT system stabilizes, and we'll take a call on that. Thank you.
So one more thing. Secondly, this what they call because it is faceless issue of notices are coming. The what they call department is not providing demand amounts raised, details of demand, backup for demand amounts raised, and how do we handle this?
You're basically talking about some of the notices which are being issued even in 73, 74, or you are talking about only the in terms of the email communication on for seeking explanation or clarification with regard to the
even show cause notices, I think.
In show cause notices, you mean to say they are clearly not identifying the liabilities?
Yeah.
I think we would like to get a few sample copies, Ravi.
Okay.
At least, basically in GST, if you look at the communication by which we want to communicate with our taxpayers and so far as those mismatches are concerned, obviously they're all system enabled and system designed in such a way that all the mismatches, table wise, we do get an input and we do look at and communicate to you. The communication is basically the discrepancies which are apparent on record with regard to what information you have furnished in your R1 or your 3B or with regard to your 2B versus 3B, where even we are taking care of, as you said, import or reverse charge payment, etc., reversals, etc., on which only you have knowledge and control over it. For example, if you have raised a credit note and made an adjustment, since we don't allow the revision of return, you will be in a position to explain to us, yes, this liability was created, but this has been utilized in the subsequent month, etc. Now, when we write to you, wherever the clarity is not coming, please write back to seek such clarifications. We would also tell our tax officers to be very focused and specific, because the information which is made available to them is to that extent is very precise and specific to the period for which the discrepancy is there. And they also must explain that how we are raising this point of it. We would try to educate our tax machinery to give a letter or a communication explaining the reasons at least to why they are communicating with you. a notice issued without even a quantification of a liability, I think we would certainly look upon the cause and try to address them adequately. Thank you.
Okay.
Thank you.
So,
There are more questions. Sudesh, would you be able to answer the question, please?
Sir, good evening, sir.
Yeah, good evening. Yeah.
Sir, credit would be denied where supplier has not filed the returns. Fine, sir. But at a later point of time, if the department recovers the tax from the suppliers,
Yes.
because on account of investigation and other things, then should there be a mechanism where it should be informed to the recipient that now the tax has been recovered so that the ITC can be claimed, because there's a timing gap. Suppose the recovery happens at a later stage, then how will the recipient come to know? So how do we fill this gap?
Well, we have provided a mechanism for claiming refund by you.
So we'll not come to know when the recovery happens from the department.
Basically,
the supplier has.
This is where we are all getting into this. How do you have to be very, very alert with regard to your supplier? Now, know your vendor. We are providing through the GST, and whether he has filed a GST or 3B or not. He has filed a R1. As I just explained to you, between the mismatch happening between R1 and 3B filing, we are trying to bridge it by bringing more and more stringent provision on the supplier side. Now, if that person has actually used a credit for paying tax, which has been forwarded to you for taking credit, and if that credit utilization has been found from his supplier side is not eligible to him, I would recover. And your argument is that the moment I have said the mismatch between the supplier and rewards, you have been denied the credit. The one way I recover from you, if you pay and then subsequently I recover from the supplier, you are eligible for a refund 100%. Not only eligible for refund, but also the interest, if I would have recovered from you, that also you should be in a position to claim it from us. Now, if you are asking me that every time when I do an investigation case and recover an irregular credit, how many chains of supply this guy would have used that credits of downwards is going to be not that easy. And we are not working in a blockchain. We need to look at that. But the point what you are making is noted. If the department recovers, it is not our intention that it has to be recovered from two persons. It has to be from one. But to what extent that credit, identification happens and that could be done is something which we have to address. We will look into that, and probably a paper could be prepared on this and sent to us from the user perspective. We will try to examine that actually. As of now, we have provided the refund route. The supplier has paid the tax along with interest. Obviously, the interest to be paid for the delayed payment is on the supplier side. Prior to which, I think if the recipient has reversed the credit and if he had even recovered the interest on that credit which is held to be inadmissible to him, he can always claim that as a refund. The 2 years time limit has been provided. 2 years time limit has been provided from the due date. You are all aware that the relevant date we have given a much beyond what it was in excise and service tax period. But those are the monies where we have recovered from the supplier consequent investigation, which would result in certain entitlement for the subsequent site. We would like to examine it. There are legal constraints. Any tax which is a tainted tax, the credit cannot flow is one of the legal provisions which would come in the way of it, but we will address that.
Thanks.
I'll work with them to get a paper out and share it with you. Next, I'll go in the same order in which people have raised your hand. Mr. Aarti Pillai, sir.
Very good evening, sir.
Yeah, good evening, Mr. Pillai. Yeah.
Sir, this is regarding the audit which are going on across the country now. What we are seeing is that in general, I'm giving the gist. They are simply asking us to give the download of 2A and 3B, match it with each other. Now, today in 2021-22, we have been asked to match for the period pertaining to 17-18, 18-19, 19-20. Problem is, even if we are willing to provide, wherever there is no match or wherever it is not matching, even if we are saying that we will provide complete invoices, whatever the basis on which I have taken the credit, then you should be satisfied with that. But what we are saying is no, 2A should match with the 3B, otherwise we are bound to issue SCN only.
Okay, but you have already filed the annual return for that period. Would that not also be showing the adjustment entry what you have done it?
Sir,
with regard to
adjustment
the-
in,
Yes.
that will show, sir. But for example, today, if I am taking the match, even the reports are made available today, the guy or the supplier who has uploaded and made, he would have made a mistake. IGST, CGST or ISD main registration like that.
Okay.
Those type of, there is no opportunity for me to correct that today.
Okay.
So this is posing that I'm just forecasting that across the country there will be people will be flooded with the show cause notice on this account alone.
Okay.
And audit team should be advised to accept as long as I am able to produce the invoice copies for the credits that I have taken. They should agree to it, and then the matter should end there. That is the request.
Yeah, insofar as that payment of tax from the supplier side is concerned is not in denial. And you have taken the amount of tax which has been paid correctly to that extent. The correctness of the assessment of the supplier side resulting in variance should not result in some sort of a disallowance of the credit to you is what I understand. Is my understanding is correct?
Yeah.
The issue with regard to, when we take up an audit, a lot of reconciliation will have to be done based on the declaration information furnished by you. One problem what you have raised is our officers asking you to produce all the copies of the document which they do have. They themselves should be in a position to download and see. But there are some challenges other internally, because the way in which you see your 3B written and R1 written and also your 2B written or 2A, the departmental view is not like that. Sometimes they may ask for ease of convenience, but that's not a reason which I would say that they should call for. They should be in a position to sit down and do it. We are internally working on how to make available at single place all the information to our auditors so that they don't burden you with additional information sort of. But insofar as those differences are concerned, with regard to what explanation or adjustments you have carried out in the annual return, coupled with whatever the information what you're furnishing, if it is not relating to any loss of revenue or any gain in input tax credit denial, etc., we need to educate our officers to take the practical view on that. I will look into that and try to see. But there are other challenges in the audit people have been talking about. They have not been given time. There is no discussion with regard to the discrepancies on which they are proposing to rise a para. The consultation process is missing, etc., We would like to try comprehensively address that actually.
Okay, sir. Sir, there is another issue. For example, in case of GST refund, sub rule 4 of rule 30 was amended in 2018 in September, which was authorized that the authorized officer of the SEZ unit should certify the invoice for having received the goods in Q2.
Yes.
Whereas the GST provision 89, that provision says that the specified officer has to certify. So far, irrespective of whether SO signs or AO signs, so far it was going on smoothly. But what we are hearing is the apprehension is that AG officers have already raised the issue with the tax authorities, means the GST officers, that why you are accepting it when the GST rule says that it is only by specified officers, why you are accepting the endorsement of authorized officers.
Authorized officer is the one who is there in
SEZ unit, so mainly superintendents. Whereas the GST rule 89 to Provision 2, I think 89 to Provision 2 also says that specified officers. If it is specified officers are not signed, then please reject the claim. That has been the direction given by AG office.
Specified officer is the jurisdictional GST officer?
It is only mentioned as a specified officer, sir.
Okay, we will address that concern. We will address that. You have brought it to our notice. I have taken note of that. We will get it examined at GST policy being applied. We will do that. Okay.
Yeah, sir. One small issue. When we file the refund claim against when we file the refund claim for the supplies made to SEZ units under rebate scheme on payment of tax, can the officer reduce my credit on account of wrong availment of ITC credit? Means, for example, I have lodged a claim for 1 lakh. In the process, there is I have availed the wrong, whether right or wrong, that itself is in dispute. But let me accept that as he is right. That 1,000 rupees, if I have availed the credit wrongly or ineligible credit, it is possible that I would have utilized the opening balance of the credit also.
Yeah, what you say is that I think I had sufficient surplus credit, even if the disputed credit is reduced, still I would have had a eligible credit balance, which I could have utilized it. But
Yes.
The denial has been happening on account of this credit being disallowed or etc. Is that what you're trying to say?
Exactly, sir. Exactly.
These are all individual issues, Pillai. We will look into that. The law is very, very clear insofar as the period for which you are claiming the credit, there is a debit happens in the electronic credit ledger before your refund is being processed, be it on the accumulated route or it in the form of an IGST payment. But if there is a dispute on the eligibility to credit itself is there, the disallowance happens and the recredit also in the PMT03 route doesn't happen for that matter.
Yeah, exactly.
But where a credit is held to be admissible, but refund is not admissible, they are duty bound to recredit it into the electronic credit ledger, right?
Yes.
I will look into the scenarios as well. But these are all individual cases. We will have to look at with a lot of care to see that is it a widespread phenomena or it is there is a stray instances happening. There are some mechanisms by which you should be in a position to redress those grievances. We will see that.
Right, sir. Thank you. Thank
you, sir. It's a request to all of you is that let's keep generic issues. Let's not take very specific issues to a company, etc. Manjesh, over to you. I mean, you post your question, please. But keep it not a company specific issue.
No. Yeah. Thanks, sir. Good evening, sir.
Good evening.
Sir, I got 4 queries, sir. One you have already answered, sir, in detail. But again, I need to add one more point on that. Bill of entries on importation of goods are still not appearing, and we have you addressed that in detail to answer the one of the participant here, Ravi. So the only apprehension about the added point was that there are certain credits which basis my bill of entry I would have taken in December 21. Now, after we raise a query on the GST portal, we get a credit somewhere in February 22. So to that extent, the officers are issuing notices to us saying that they're ignoring the month in which we are receiving excess credit or taking a short credit. Only they're pointing out those queries where there is a excessive credit taken against less credit available in GST 2P.
But you'll be in a position to demonstrate the month in which the bill of entry was assessed and the IGST payment has been made. It's very clearly there. But
yes,
the
credit
on the subsequent month because the GST could not flow it on the same month in which the IGST payment was made.
Absolutely, sir. Absolutely.
The officers are proposing to deny the credit or they are trying to demand the interest for that, whatever it is.
No interest, sir. They should ASMT 10 for now for asking for. And one surprising thing is that DGGA also has started investigation, asking us a lot of details, and the value they're giving at a summary level, but which is not matching with the credit either at the iSCATE level or with us. Say supposing the officer says it is 1 lakh rupees credit what you have taken, but in the iSCATE where I see it is 1,50,000, where I've taken a credit of 80,000. There is some mismatches, sir.
All right. I think I will have an exclusive meeting with the CEO of the GSTN. Soon I go back to Delhi and look into all these issues. But in all such matters, my suggestion is that you are all interacting with your respective tax jurisdictions. The GST Seva Kendras, or for that matter, the GRC committee meetings, or for that matter, even to your jurisdictional officer where such issues have been raised. I think you must bring it to the notice of the senior management and tell me, here is a case where I have paid the tax, the bill of entry has been assessed in a particular month. Because of the GST and auto not flowing it to the credit of my electronic credit ledger, the credit which otherwise accrued to me on that month gets accrued to me. No doubt this has come into my ECL only on this month, but it ought to have come for the purpose of technically, I should not be penalized on that. You must be in a position to do it. Let me have a word with the CEO of GSTN, and if required, we will come up with some set of FAQs on this. Okay.
Thank you, sir. Sir, the second question is on my. We have a SEZ unit, sir, and same thing is happening where we have an option to file the bill of entry on behalf of my customers. The customers are still coming back saying that that bill of entry is not reflecting in their GSTR 2B, and we don't have any visibility on whether the credit is available or not available. We are asking them to go use the services which has been provided by the CBIC, the bill of entry search. But they say that they have to search one by one, and it is so cumbersome process. And then the first apprehension about the customer is that why should I do it? You should have reported it. It is your fault, and then I will not pay the payment. And
I understand. Yeah. Badri,
depriving.
my small request is, right from what Ravi has raised and what Pillai has also
Manjesh.
said about, and Manjesh is now telling, I just want different scenarios in which the challenges are faced in terms of not auto-populating the 2B in terms of the IGST paid on imports and also the SEZ supplies. Do send me a paper on that. I would see that.
I'll do that.
The idea is that appreciate the scenarios and look at exactly how best we have addressed it for the past and how best we are going to do it in future. And should these issues come up for obviously the ASMT10 or a query can be raised. That's a part of the design of the GST. But once your explanation has been given satisfactorily, I think that should not further get escalated into sort of a tax demand, etc., etc. So long as the credit on the tax paid during that particular month is not in dispute. Okay.
Sure. I'll do that, sir. One more request to all the participants, where it is a specific issue and it's an operational level, I would encourage you guys to approach the Seva Kendra and the help desk, which is set up by the center and the state respectively. They are very responsive, and let's not take Mr. DPM's time for all that, please. It's a humble request.
Basically, why I am saying that it should be taken up with the GRC and also with regard to the Seva Kendra, because we also would like from not only from the taxpayers perspective, but also from the tax administration, when such queries and such denials are there, it's also leading to, I think, avoidable in a compliance burden to the taxpayers is what I think from the tax administration that information should flow back to us. Because many times aggregated information could come. You would be in a position to give it to the GST Seva Kendra in Bangalore. GST Seva Kendra could receive from 10 different taxpayers. If they can aggregate that and give different scenarios to us, maybe I think even to the GST and CEO, or for that matter at that level, because we are also part of the ITGRC part of it. In case if there is any interest or any other liability accrues on account of the system doesn't deliver to you the solution in a time-bound manner, even those things would be taken up at a higher level with regard to those things. So are not interested to deny you the credit when system has deprived you of not auto-populating in a timely manner. Yeah.
Thank you, sir.
Mr. Gopal Reddy.
Sir, sorry, Badri, just one more question, whether this is right form or not, I don't know. Sir, one query about specific is that jurisdictional officer has issued a notice appraising that AG audit, Accountant General Audit wants to conduct a subject specific audit for a particular taxpayer. So, and in the notice they have not specified any provisions under the law. So what is the authenticity of that notice is something what
Is the AG wants to come to your premises and do the audit, or AG is doing the audit of the tax jurisdiction in which you are assessed? The tax office is being audited, or you are being audited by the AG?
So we have received a notice from the jurisdictional officer asking that to submit laundry list of details for the purpose of subject.
I got a point. That means the AG is not coming to your premises. The AG has asked some information about your registration to your jurisdictional office, who is requesting you to provide so that he can provide to the AG's office. That would be the understanding. So that much is clear. Now, what is that information which they are asking? I think, Badri, bear with me. I think I would like to get to understand this exactly what they are trying to say. Okay, tell me, what are the documents they are asking for?
Sir,
Subject
all
you said they don't tell what subject they are doing, but they want some document. What sort of a document they asked?
GSTR 1, GSTR 3B, GSTR 9, 9C, then all the sales ledger, purchase ledger, stock.
GSTR 1, 3B, GSTR 9. You must give a reply that this is already filed and it is available in the system. Kindly you may download it and take it. Since I have the same copy what you have, I think you should be in a position to download it from the system. Reply is as simple. Okay. Sales ledger and purchase ledger. Okay. Then.
Sir, they have listed about 56 list of documents which they have asked us, sir, which is quite elaborative.
Do send it through BCIC to me. Let me try to understand what exactly is about that.
Okay,
But
right.
Having said that, let me also clarify for the benefit of everyone that C&AG is an auditor having the constitutional mandate to audit the accounts of both receipt and expenditure of the government of India and also of the state government, by which of the constitution all of you are aware. Now, insofar as the receipt is concerned, the revenues, GST constitutes one of the major sources of revenue for the government. And accordingly, they would like to assure that whether the laws and the rules framed with the approval of the Parliament have been adequately implemented and whether our IT systems are adequately designed to meet those objectives, etc., we cannot deny that information as a tax officer. But the C&AG office has been provided complete access to the database, or which is there in the GSTN, whether it is your R1, whether it is 3B, whether it is GSTR 9 or 9C reconciliation. All these informations are available to them in as much as is available to a tax officer, as much as available to you. So those information, what is already available, it is already there with them to see and satisfy themselves. In respect of the purchase and sales, if they're asking for, it is getting into some sort of an audit.
Yes, sir.
A financial records reconciliation is happening through your annual return filed in form of 9 and 9C. Now, individual financial information records are available, accounts and records are available in your principal place of business or the places in which we have taken that business in your registration. So what is that information they're asking for? To how far is that documents which are prescribed under law, which is not prescribed under law? I would like to see. Please send that 55 list to us. We will look into that. Okay.
Sure.
But
Sure, sir.
I just want to tell you that C&AG doesn't come to audit you in the premises like what it is happening in service tax and excise and VAT regime. It is now only limited to the tax office specific. But they do conduct subject specific compliance audit, like they have done one on GST refund, another they have done on GST transition credit. They may take up maybe ITC in the proposed year. They are going to look at these records, but certainly our objective is to ensure that whatever is available in the system, which could address those concerns or the challenges, should be met with. If the additional information this range officers are asking in a manner of a list to you, I would like to get it seen exactly to what extent I think they are required in the context in which it is being called for. Okay, let us see.
Sure, sir. Sure, sir. Thank you, sir. Thank you, sir. I will share it.
Mr. Gopal Reddy. Okay, we'll move to Prabhakaran. Prabhakaran, are you there? Okay, so they are not. TG Ramakrishnan, sir.
Yeah.
Yes, sir. Am I audible?
Oh,
yes.
Yes, sir. At the outset, sir, delighted to see you here addressing us on after various sessions you have taken to us and helped, BCIC over the years at short notice in addressing our members. Wonderful and well-deserved, honorable sir. As we really delighted to see you as a GST member and special secretary. Wonderful, sir.
Yeah, thank you.
So just small, a small policy issue, not relating to the budget. See, this resident welfare associations, they have been representing that this exemption limit of 7,500 rupees has been fixed for a time. Now, over the last 2 years, especially all the costs incurred for the, COVID compliance by them and things like that has actually added to their cost. And is there a way that exemption can be, increased to some extent that will really help the association and the members? That is my only question, sir, to you.
Yeah, the Residential Welfare Association, I think the exemption limit given was about 7,500, and that was based on the recommendation of the Fitment Committee and approved by the GST Council.
Yeah.
Now, if you feel that, I think due to inflation and lapse of time, I think that threshold need to be increased, and that is to be a policy decision to be taken by the GST Council after due examination by the concerned Fitment Committee. I must tell you that a similar representation is received elsewhere from the country, and it is under consideration by the respective committee. But what would be the outcome? I think I may not be in a position to even make a guess about it. But this is already has been brought to the notice of the Fitment Committee for consideration. Yeah, thank you.
Sure, sir. Thank you so much.
Santosh, are you there? Santosh, are you there?
Yeah. Good evening. Good evening, DPN sir. Wonderful to see here, interact with BCIC members. In fact, a couple of weeks ago, we met you in Delhi along with my tax head. I'm from Infosys. I hope.
Yes, please. Yeah.
Yeah, sir. 3 specific questions. In fact, one of the questions we had discussed there in that meeting itself. But there are 2 other specific questions which I would like to bring out here.
Yeah, please.
the refund, there were a couple of refund claims which were filed. If there are refund claims which are filed in the past that were pre-online days, and if they were rejected, or if they are recredited, and if they are rejected, and if the taxpayer takes it to the High Court and gets a reversal of that order, and in between, if the officer, jurisdictional officer with the over enthusiasm recredits that amount, what is the solution here? Because if
you want to get the refund in the form of a cash for which you got an order in your favor by the High Court. That's what you're saying.
Yeah. We have to get that refund in cash, but that officer has recredited the amount, and if the officer recredits such amounts, even without considering the fact that the matter is before the High Court, the assessees or the taxpayer will be at a loss. Because once we get the order in our favor, how do we go back and claim the refund? Because now when we are approaching the authority is saying that you have to file it online again, which is impossible. The system doesn't allow it. So we are stuck with this situation specifically, and I hope such similar situations would be there for the other taxpayers also. While there is a specific issue that we have in Infosys, it could be an issue with other taxpayers also. How do we address this issue, sir?
I'm glad that you brought this to the notice, but for that we need to make a workaround by which I think the GSTN should allow you to make a claim for the same period, for which I think correspondingly, I think there has to be enablement provided by the concerned policy wing. We will try to address it. Please make a representation to us with regard to the specific instance. We will try to address that. Because otherwise, we will not be in a position to give effect to the implementation of the court order, which is also a major concern for us.
True, sir. And the second point,
only one input we will be waiting for, whether the order of the High Court has been accepted by the jurisdictional officer or they have further challenged it. We would like to have it. Once the High Court order has reached a finality, that we will take an input from our tax authorities and take it further. We will address it.
Sure, sir. And second
refund under any other category will not be allowed to be done. Is it what your apprehension is? The time limit is over, therefore it will not take it. Or
obviously, the time limit is over. And time limit will not be over because the matter is sub judice for that period. So the limitation will still remain. The second part, and this was the second part is the system doesn't allow it, sir, because it's for the past period.
The time limit automatically, because once the court gives it, becomes an order under 226. We are bound to implement it, but the system is not designed to accept it beyond the 2-year period. Is what the concern you are bringing to our notice, right?
Yes, sir.
Okay. Yes, since it's an appeal and it was pending before, I think giving effect to the court order that has to be done.
Yes, sir.
See, so there is a comparison here. Suppose if the original authority rejects the appeal, rejects the refund, and you file an appeal and the appellate authority allows you, I think in that situation, the refund is flowing to you, at the first appellate level, joint commissioner as additional commissioner, if he allows the refund, that refund will be allowed to you.
Yes. Sir, here the peculiarity of the situation is the officer did not wait for the High Court to decide. The officer recredited the amount. So that is where the challenge lies.
Okay, I have understood that. Okay.
Yeah. And the second issue.
This what Sridhar has raised about that, please do send it to me. Let me see.
Sure, I'll do that, sir. I'll do that.
I don't want to give an offhand reply, but I appreciate there is an issue which needs to be clarified.
Sir, sure. And second issue, sir. Second issue is, in fact, in the introduction, at the fag end of the introduction, you had made a mention about this suppliers, the recipient's responsibility to ensure streamlining his business and disciplining the suppliers. While at the same time, you also mentioned that there is going to be an enablement in the return filing for the recipients where the invoices which are not uploaded or the invoices which are not reported by the supplier can be reported by the recipient. Is that, did I hear that clearly, sir? Or is
No, I think you completely heard me wrong. There is no way you can add an invoice while claiming the credit for which corresponding disclosure has not been made in the GSTR one by the supplier.
Sir, my request is if the if the department is looking at reversing the ITC credit because the suppliers have not complied with the law in reporting those invoices, why not allow the recipients to report those invoices? Because we have those invoices, we have paid the tax as well as the
paid
value.
the tax amount to your supplier, but the supplier did not pay to the government, no?
True, sir. So if the system is enabled in such a manner that when we report it, it can create a liability for the supplier, and
even without that, I have already said GSTR1, the moment you see, there is no way you can take a credit on an invoice which is not disclosed in the GSTR1 by the supplier. Let us agree on that.
Correct, sir. Yes, sir.
Yes. So if he has declared in GSTR1 on which he has not paid the tax, on which your credit is in jeopardy, I have already declared in 7512 it's a self-assessed liability. I'll go after him. I don't have to create a liability on your adding that invoice into your input as credit statement. But if you are saying that the person has raised an invoice against you and you have paid the tax along with the consideration, but he has not included in the GSTR1 period for which that supply relates to, please bring it to our notice.
Sir, and one more corollary to this. Assume for a moment that the GSTR1 is filed. The GSTR3B also is filed by the supplier. But the actual tax payment by the supplier is less.
How does that happen? Because there cannot be a short payment of tax insofar as the return in GSTR is filed. GST3B is filed. For any number of reasons, the 3B assessed liability could be short paid on account of MS classification, undervaluation, irregular claim of exemption, blah, blah, blah. It can be there. But on the liability assessed and disclosed in the GSTR 3B, unless the full offset either through ITC or cash payment is made, he is not allowed to upload the return. Am I right, Badri?
Yes, sir. Absolutely. I mean, the return only will not get filed.
See, there are genuine situations where your supplier side information could undergo change on account of a subsequent short payment, non-payment, or incorrect availment of exemption. All those things will happen. But that is the thing which we lived with that in the past also, in the GST, pre-GST also we lived with that. Now, your corresponding entitlement to the credit or reduction in credit could happen on account of the supplier side credit being altered. You see, if the credit is not refunded to the supplier or additional credit is not demanded, we are not going to alter it. That's what I said. Beyond the GST system, your commercial system can work in such a manner that some of those bad debts can happen on which tax has been paid, you have taken the credit, you are foregoing the bad insofar as the consideration is concerned, but you are not seeking a refund of the input as credit as such built. It can be done, right? So those are commercial situations, but I think there is no way as short payment of tax is permissible in the GSTR 3B on the liability assessed. That's what I just want to say, Sridhar. I would like to understand more on that.
Sir, one more last Badri, last query.
Yeah, a lot of other people also have questions.
We'll take it, Sridhar. No, we'll take it, but no problem. Infosys is an important taxpayer for us, right? And incidentally, he's also a solution provider for GST, and so we have to hear him twice.
Sir, with regard to this, in fact, we had a discussion on this unified approach for GST audit, and when do we get some clarity on that? You said you have ruled out LTUs per se, but is there some light at the end of the tunnel for at least large taxpayers?
Yeah, I think those
while the compliance will remain, we are okay with getting registered with different.
I have understood your problem. We're given a detailed paper on us. I think the Infosys concern is they are multi-locational. They are registered both in certain locations by center, in certain locations by the state. There are multiple concerns raised in terms of the tax audits and tax department queries, for which I think he has to respond. Not necessarily at the same time, it could be in a different timelines and different manner, but ultimately the concern is, I think it's all reconciled with regard to entity-based account. So much differentiation made in between state-wise ultimately may not result into any effective outcome, but for the cause of concern in terms of replying to multiple authorities. That's what Infosys has raised, and Infosys has also come up with some sort of a suggestion that why don't you have a bench consisting of the state and the central tax officers, be it in audit, be it in scrutiny, be it in adjudication, be it in appeal, so that the taxpayer faces one single authority with regard to one particular compliance issues. That is what the Infosys has wished. Am I right? If I have understood you correctly in your
Yes, sir.
representation?
Yes, sir. While I
Yes.
will continue
Yes.
to be
Yes.
registered.
That's what the vision, what I think Infosys has put before us, to say that,
Yes, sir.
see, as a taxpayer, I am multi-locational and I am present. Yes, because of the subnational taxation, I am bound to report to each of the jurisdictional authorities for my tax compliance purposes, for which I think audits are being conducted or scrutiny is being adopted. So I need to provide information to different tax administrations at different periods of time, pertaining to perhaps, I think, on the same tax returns filed information, on which I think I have combined financials maintained and for which I need to respond. And maybe the interpretation taken by the authorities may not be uniform. The conclusions are it may not be uniform, subject pursuant to which I am put into a lot of disadvantage, and it may multiply my compliance obligations and also lead to litigation. That's what the Infosys has said. We have taken note of that, but in the current design in which we are working now, audit is a planned work. Scrutiny is a planned work. Enforcement is not a planned work. There we are given the cross empowerment completely. But in these two categorization, we have allocated the taxpayer jurisdiction specific. So only those jurisdictional authorities will have the power to exercise the compliance verification powers, and we cannot look at that. But going forward, we are seriously looking at how do we address this concern in future. I'll give a simple example. I think you will understand what is the extent to which the complexity could be there and how long it would take in terms of addressing those concerns. We know DGGI has got pan-India jurisdiction. DGGI also may undertake an investigation pertaining to a particular issue, let us say a classification issue, involving all the locations in which such an entity is operating. It has to issue the notice by the jurisdictional officer, no doubt about that. The DGGI will issue a notice consequent to completion of investigation as a single authority. But this notice will have to be made answerable to the jurisdictional proper officer for the purpose of resolution of the dispute. Now, assuming that in 29 jurisdictions, the taxpayer will have to is operational and the issue is common in all these places. They'll issue on 29 jurisdictions the show cause notices. Maybe in 15 jurisdictions it is state, in 14 jurisdictions the center. The solution A is, can all these 14 jurisdictions can be put into one jurisdiction and then can be adjudicated upon. Solution B, can the 14 and 15, because it's investigation, since it is cross empowerment, can this all the 29 be put into one jurisdiction and adjudicated upon? Notices may be issued to a jurisdiction specific, but power to adjudication can be given to a particular jurisdictional authority among them. For example, we had a concept called a common adjudicating authority in the excise and service tax as well. Now, we are coming out with some sort of a guideline. You've already seen some circular issued last week with regard to appointment of common adjudicating authorities for notices issued by DGGI. We have issued a circular, we have issued a notification. We are looking in that direction. But what you're looking at is a bench of officials consisting of both in state and center, who is specifically administering a taxpayer across the country. Like an amorphous body should sit together for that solution, arrive at an issue, and then decide and then go further. I think that a very long time, Sridhar, but we would certainly look at some of the concerns what you raised has already made us look at how do we internally look at these processes. Like, can we issue some sort of a guidelines or maybe a guidance note to our auditors as to multi-locational entities when they are being subject to audit, what we should ask, what periodicity with it should be coordinated. We are trying to look at it. What you are given is a paper which is very comprehensive. We are looking into that. But solutions are going to be not that easy to come. We have to work very hard, bring the consensus. It is not one single tax administration. We have to deal with all the tax administration, address their concerns adequately. And of course, the object is to reach towards there what you are talking about. Thank you.
Thank you. Thank you very much.
Thanks, Santosh. Just Santosh was mentioning, maybe coming out with a manual which is kind of provides a uniform way of conducting an audit or issuing notices and asking for information, it would augur very well, sir. Today,
Badri, we are seized with the matter. We would certainly would like to do it for the central tax authorities. We have a GSTM audit manual. What we are doing is for the last about a month or so, chairman and we the members, we are interacting with our audit formations. I had yesterday a meeting in Hyderabad with audit commissioner officers. Our chairman had an exclusive meeting with audit officers in Bangalore when he had come about a fortnight ago. We have been constantly in dialogue with our officers. The things which are available in the GST regime, like everything is available in the system to download and take it. There are challenges, as I told you. The way in which you see a 2B is not the way in which my officer can see the 2B. There are challenges to that, but we are internally addressing it. But in respect of this multi-jurisdictional authorities, how do we conduct an audit in a coordinated manner is something which we can think about it, plan it. As I told you, this is a planned work. So if I'm going to do audit, let us say, of Canara Bank. So Canara Bank is going to be present in all the 29 states. So 29 registrations will have certain commonality with regard to the way in which accounts are being maintained in the head office in Bangalore. So probably all the queries relating to some of those registrant specific audit queries will have to be addressed by the head office with regard to their registrations in the state wise. So how do we deal with this audit? Can we decide that we can a priori at the beginning of the audit year that we will say this year we'll take it up for Canara Bank? If you are doing, some of them will be audited by the state, some of them will be audited by center. Can we have a common approach with regard to this audit, given the information what is made available to us already, right? A coordinated audit is possible. So that's where we need to look at it. We will take it up. This issue had come up before the GST Council about a year back. There was a committee constituted for coordinated audit by the state and the center with regard to multi-locational taxpayers. There was a subcommittee still is examining it. They have not come to any conclusion. In the meantime, the tax administrations are constrained because of the timelines expiring. They have to do the audit and close that audit period. So there could be some urgency on the part of tax authorities to go ahead with audit. But we will, in this regard, we are looking into some of the suggestions coming in. And it's our interest to see that it's our earnest wish also to see that the approach is uniform so that the taxpayers are not put into too much of a compliance burden in terms of addressing to the tax authorities in a different manner or interpretation happening in a different manner to the extent possible. We'll try to give a coordinated approach is what we are trying to examine it. It's in a very early stages. The CBIC internally first has to examine. Then we may have to take it to the agenda point to the GST Council should there need to be arised from problem. Thank you.
Thank you. Maybe a few more questions, sir. We have another 10 minutes or 10, 15 minutes. Is that okay?
Oh, we are already past 6:02. You said
Yes.
4:36. I didn't know that how 1.5 hours has gone. Okay, all right, no problem.
Okay, just a few more questions. Mohan Sundaram, he had some questions on the registration aspects. Mohan, you want to unmute yourself, please?
I think you need to unmute. Yeah. Good evening, Mr. Nagendra. I have a simple question. Able to hear me?
Yeah, I can hear you. Please go ahead.
Yeah. So this regarding the additional place of business, we have a challenge, peculiar challenge. We need to add, on a monthly basis about 40, 50 additional place of business. Today, the way the registrations, additional place of business works is we can make only one application at a time. Obviously, till that application is disposed, you cannot file another application. And on average, and as per the guidelines, 15 days is the timeline given for disposing an application. And even in the application, if I have multiple registrations put, and let's say out of 5 registrations, there's an error in 1 registration, that documents that are uploaded, the officer can either accept all 5 or reject all 5. So there's no possibility of accepting only 4 out of 5. So there's always a constant challenge for us to add additional place or delete additional place of business. So can't there be some relaxation on this rule where you can accept multiple applications?
Additional place of business is a core field or a non-core field?
It is a core field.
Is it a core field amendment?
To what I know, it is a core field, sir.
Okay, so it has to be an office approval approach. It depends on officer's approval, right? Okay, right.
That's right. Okay. That's right.
Okay. Now, why is it that if they have to accept all the 5 places they accept, otherwise they have to reject all the 5 places? Can you just elaborate it, Mr. Mohansundaram?
So basically, let's say if the documents required are, some set of documents to be done, there's either the way the scan copy has been uploaded, one document is not correct. Then the officer doesn't have an option to adopt. He has to accept the application in full or reject the application in full. So if the officer finds a fault in one of the 5.
Registration is the document which you have submitted is common to all the 5 registrations, right?
No, it is separate documents, but it's separate places, so separate documents are there. But let's say the officer finds error in one of the documents of the 5 registrations, he has to either accept all the documents or reject all the documents. He's got no option to accept 4 or 5.
Your application for core amendment has got one unique reference number.
Yes, that's right, because I can only apply once.
Okay. We will see what best we can do on that. First and foremost, I need to understand how you said 40, 50 additional places I need to do a modification every month, you said.
So we have a large network. I'm part of Aditya Birla Fashion Retail Limited. We have a large network of stores. We had about 400 stores a year. And sometimes when we do a strategic acquisition, like, we're going to Reebok, then we need to add a large.
It's absolutely fine. Since it is a core field amendment, that's where I think the pre-approval comes into that. Let me address it also. Badri, please, in this case, please do send the type of challenges what they are facing on that. Let me understand it.
Sure,
because
sir.
I'm still willing to look at it to see from a systemic point of view. Are there anything which we can do to ease the compliance there? Right.
Done, sir. Done.
Thank you, sir.
Done. Thank you. And Venu, are you there? Venu Gopal, you had a question. You posted it quite some time back on the chat. You want to unmute yourself?
Yes, sir. So this is with regards to the credit notes received from the supplier. Now, the challenge is in terms of presentation in the GST returns.
Okay.
There are 2 ways of presenting in the GST returns. One, I can reduce my input tax credit and avail net input tax credit, or I can avail the gross credit and show it as reversal.
Yes.
Now, if I take it as the first option, which is I avail net input tax credit, the contention of the officer is I have not reversed the credit, so it would be disallowed.
Yes.
If I choose the second method, stating I will avail the gross credit and reverse the credit note in the reversal section, GSTR 9 has been designed such a way that the table 8 will represent net of input tax credit, but my gross credit is auto-populated in my 6B, resulting in a negative figure in 8D. Whenever 8D is negative, notices are served saying that you have availed excess credit, and again officer is asking for a reconciliation of 2A and detail, which is again put to a lot of trouble. Now this credit note, a note should be given how it has to be presented from the department.
Okay. Badri, you have any views on this?
Sir, I would believe it is more appropriate from my reading of the law to show it as at a cost level and then show deduction. But of course, it will be a mismatch between with a 9 and a 9.
That has to be explained when the negative balance comes, rather than the demand part of it. Yes, I want to ask a question, but I think so. But you know what happens? When you net off, actually that's not the correct procedure, because you have reversed the credit with regard to the proportion of the credit note use. You have done an adjustment, right? Your books of account will show that. So you show this minus entry coming in the annual return, leading to a query should not put you to only claim it as a net. It has much bigger challenges for us. Nonetheless, on this, let me have an internal brainstorming with my officer. So,
sure, sir. The challenge
to me, but my off the cuff response to you is that you have to take the gross credit and then show the reversal, and then notwithstanding the minus happening in the annual return, you may give it as a sort of a clarification which the officer should be satisfied about it. That's what I would say, rather than a net credit. But I would like to do a proper due diligence with my law team and then come back with authentic reply.
Thank you.
Thank you. Thank you. We have Lakshmi Ratna. Lakshmi, you want to unmute yourself, please?
Yes, sir. Good evening, sir. Just 2 quick questions. Sir, this is one issue where ASMT 10s are being issued for scrutiny of returns, where there's a mismatch between GSTR 2A and 3B. While we do understand that this is for certain tax periods, one thing which I wanted to understand was, can ASMT 10s be issued for overlapping tax periods? So what I mean to say is, say an ASMT 10 is issued for the period from April 21 to September 21. Now, without that being concluded, can an ASMT 10 again be issued for April 21 to December 21?
It could be. Basically, you see what happens is this is where we want to understand the background of the GST law. If you can all recollect, we have brought in the provisions of 73, 74 as a demand towards a short levy, non-levy, not paid, short paid, or erroneous refund, including the input tax credit correctly erroneously availed, etc. Now, an ASMT 10 is basically, when do we rise an ASMT 10? ASMT 10 we rise with regard to the issues which could precede, basically. It's a part of the scrutiny of the return. The ASMT 10 is a fact-finding exercise first before we escalate into some sort of a full-fledged compliance verification in terms of audit or maybe demand or even inspection, etc. Now, you are basically probably suggesting that, see, if an ASMT 10 has already been issued to me for a particular tax period, now, even before that ASMT proceedings are concluded, can another ASMT 10 be issued overlapping with that period for some period on the very same issue? There could be a different issue on which ASMT 10 can be issued. I think, I hope on that we are on the same page.
Yes, sir. Yes, sir. On a different issue, I can understand, but on the same issue is the question.
There is already an ASMT 10 has been issued, but subsequent ASMT 10 issued is overlapping with that period, but some other period is also covered in that subsequent ASMT 10.
Correct,
I
sir.
think my understanding is correct on that, right?
Correct, sir. Yes, sir.
I think you must be in your response to say that for this period for which ASMT 10 has been issued now covers the period for which earlier an ASMT 10 has been issued, for which we have already responded to, excluding that period for which I have taken a tax position. My response to this for the subsequent period which is covered in this ASMT 10 is like this. You can always reply to that. But I will assure you that our officer will not fasten double demand based on 2 ASMT 10 for the same period. If that
Yes, sir.
happens,
That's the apprehension. So, yeah. Okay.
be rest assured that that's not our intention at all. If that
Yes.
happens, I think there is a possibility of a revision or a review, and things could happen on that. ASMT 10 on its own is only a preliminary information seeking exercise. But I must also tell you that, you see, in all these areas, we are now coming up with more and more capacity building program within our organization. The ASMT returns are basically raised by different tax administration in different way. I have seen some of the specimen copies of the ASMT 10 in Karnataka government. There are about 30 templates what they've created, and I have some of your professional colleagues have shared with me on those ASMT templates. In some way, some of the issues are very, very simple, like interest liability is there, you are not paid it or something like that. In some way, I think some issues, but some issues are relating to the mismatch, which could require a serious reconciliation exercise, for which what query has been raised, you may not be in a position to understand exactly what they're trying to communicate with you, sort of a thing. We are aware of that. But it's an exercise which we need to live through to make our officers also, when they communicate correctly. The concern is that if you have to comply with a particular query, you need to know exactly what this query is. You understand it correctly the way in which the officer wants you to understand it. That's very important for you to understand. That's okay. We will try to educate on that. But I think I made it very clear. ASMT 10 is not like once it is issued, it cannot be issued for the subsequent period on the same issue. If there is an overlap happens, I think by all means, I think you must bring it to the notice of the concerned authorities, right?
Sure, sir. So just another small question arising out of the budget.
Yes.
Now, the changes proposed in section 16.2, read with section 38, which is proposed to be introduced. Now, there's going to be an additional restriction which says that the ITC should not be restricted under section 38. Now, section 38 has various restrictions which seem to be qua registered person, that is, qua the supplier. Based on certain actions of the supplier, the recipient's credit will not be allowed. Now, just one question here. All these will be system driven, right?
Yes.
Okay, so there will be a flagging for each invoice that we can expect, as like a recipient can expect, and then the credit will show as not available, right? It won't be the onus of the recipient to check on for each condition, no?
Basically, all those things will be matter of a detailing which will come. We have said that in the manner to be prescribed. So when we prescribe, all those concerns what you're all raising will be adequately taken note of. Let me tell you that insofar as the correctness of the assessment of the liability with the supplier is concerned, the recipient cannot be put into that same shoe. All that what we are saying is the supplier on his part has filed a return, paid the tax for which you are taking the credit of it. The correctness of that payment, as I told you a while ago, with regard to maybe classification, the correctness of the availment of the abatement, or even the valuation, or any other compliance concern, it is on that supplier side and not on the recipient side. So be rest assured that we are not going to come back to you and put you onto a burden in some matter. And coming back to your first concern, that is it going to be system driven? Yes, this is what my chairman has said in the post-budget meetings. We are looking into some of the system driven alerts. And when we are restricting the credit, let me tell you, this is not going to be a denial of the credit. Visualize a scenario that the credit restriction is communicated to the recipient as well as to the supplier. And there is a resolution process where also would have been put in. You have now in the income tax a rectification process. We are also, when we design this law, we are keeping in mind a lot of options. I do not want to disclose all these things at this point of time, but it will be too premature because it has to be discussed internally first. But it is our intention to see that when we are going to restrict the credit, you will be reasonably convinced as to why the credit is being restricted.
Right,
Sure.
sir. Thank you so much.
Sure. We are not looking into 1616 amendment and 38 amendment to bring in the restrictions which are already put in the place. We have no intention to add to that basket. All of you know 86B has been in force from 1/1/2021. Till now, we have not put in that validation of the GSTN network. Why? We have taken the power, we have notified it. We know that out of that 1,34,00,000 people who are there, if I apply these parameters, I will not be even finding it about less than about 10 to 12,000 people who will qualify into that categorization. In that 10 to 12,000 persons, I don't have only the option of pressing in the powers under 86B. I have many other powers to do that as well. Right. So when we are looking at the 16 amendment and 38 amendment, we have worded it. Please kindly look into that. In fact, in the law, I have also explained the situations in which I could be prescribing further rules or the procedures by which I will restrict the flow of the credit or put a break on the flow of the credit for the time being. So I have made it very clear because tomorrow the courts are going to ask, you cannot exercise the power without expressing what exactly the intent of your legislation. So we have put all those categorization in 38. We have been very carefully done it, but they're broadly worded. But it will be all driven by completely system enabled thing, and there will not be a power exercise by the officer.
Sure.
Right, sir.
Thank
you so much.
Thank you so much. Thank you. Swagat, one last question from Swagat, sir, before we wind up. Swagat? Or Deepak?
Am I audible?
Yes, Swagat.
Yeah. Good evening, sir.
Yeah.
So, sir, I think extensively there's been a discussion on this ITC and 2A and 2B. I just want to put forth my one question. So, in the notification number 40, they have given they made an amendment to the provision saying 2B has to be referred for IT settlement.
Yes.
Now, so due to 1 day delay of the vendor, the recipient will be in a situation where his output will not be able to manage with the cash flows. So, is that not very harsh thing which is put on the recipient, sir? What is the solution for this? Practically, if any trading concern is taken into consideration, so everything will be driven by the ITC. That one vendor, it does not pay also, that becomes a very huge cost for the recipient to pay the payment. So how do we take this, sir? I mean, from January onward, this has been
there is, in an automated system, I think there are certain givens we need to all work together. That's what we have done so far. You see, a credit which did not flow into you, I think the credit cannot be taken in any other manner other than through the auto population which goes through that. Yes, some of the issues like what are the participants raised that the IGST was paid, there was a bill of entry, but unfortunately the IceGate and the GSTN did not at the back end integrate well, for which the credit which ought to have been flown the same month in which bill of entry assess came after 2 months. Can I be penalized for that? Where I have openly admitted that those are issues on which we need to plug it. And if there is any discrepancy pointed out consequent to which you are putting any additional liability, those will have to be addressed, including taking it to ITGRC. That's what I've said. But in this case, the tax did not get paid.
No, that is only due to one, right? So 3B he might have filed within 20th, but one here has delayed. So since still here there is no loss to the revenue. But how do we take this for recipient?
See, this filing of R1 as a precondition before filing 3B.
Correct.
will come into effect from 1/1/2023.
Hmm.
I have provided for everybody to be ready from 1/1/2023. I'm not even saying 1/1/2023 will come. This is a proposal in the Finance Bill 2022. It will get approved by the Parliament, approved by the President. Thereafterwards, every state legislature will have to pass the bill. A notified date will have to be announced with the approval of the GST Council, consequent to which only this provision will come. I have made my intent clear. This is how I will take the GST compliance in future. After all, the amendments what I brought into in 16(2)(c) did not happen one day. I disclosed my intent about a year back. It was in the Finance Bill 2021. It was proposed. I brought it with effect from 1/1/2022. I have to also keep my IT systems in place. I have to also enable my taxpayer population to be, prepared. Their internal system will have to be accordingly designed and modified. So that is why these changes do take a considerable period of time by which it will be implemented. Everybody knew 7512 is going to come in when we made that amendment. But the moment I notified in December, everybody thought that this is something is a draconian provisions. That is why, to bring in transparency, on the very same day when the GST Council discusses and comes to a conclusion, we release a press release, broadly bringing to the decisions taken. Then we give formulation to that in the form of proposals for notification, circulars, or instructions, or guidelines, or amendments in that very same agenda which comes before the GST Council. And all these things are forming part of the GST Council agenda once the agenda is approved by the competent authority, and it's put in the GST Council website. Now we are bringing all the transparency for taxpayers to see exactly what we have decided. Nothing is brought in as a surprise element. In GST, please take that in fact. The budget didn't add even one single an item which was not deliberated, documented, put it in public domain. And what we have implemented is only a formulation which has been vetted and approved by the GST Council much before. All that what we did, we put in consolidated format, what all approvals have come, what are the formulations GST Council approved. We have moved it as a part of the Finance Bill before the Parliament. So all these changes will take place. This GSTR filing as a mandate before filing a 3B will come into effect from 1/1/2023. So we will have to by that time look at it. But let me tell you, if this is law that has to be implemented in complete, and the businesses will have to work according to that. And if for any reason the credit could not flow into that month, there is nothing which prevents the subsequent month it will flow into that. So only point will be that you have to pay for that element in cash and comply with the thing. That's what I would say that. Yeah.
Thank you.
Thank
Sir.
you.
Sir, just one last thing. I think there are two questions with respect to what is
at least the solution.
Can you please?
What is the question?
Yeah, it is in the context of this safari retreats and Colombia Asia. I think the matter is sub judice unless you want to share your thoughts on that. We'll close the session.
I think yesterday also this was raised. Those matters are very, very clear. They are before the competent jurisdiction to address. But there was an issue with related to distinct person was brought in. I just want to give a broad thing without getting into the matter which is already under examination by the competent authorities. What is a distinct person? A distinct person is a person whom we have defined it very carefully, that it may be having the same PAN and business identity, but has its presence in different tax jurisdiction. And any transaction happening between those distinct persons without even consideration is a supply. Insofar as the transaction happening between distinct persons in terms of the goods transaction, there has been no concern. Earlier to the GST, we were working through a workaround method like consignment sale, stock transfer, and credit will not flow, but origin-based taxation. Then you have a complex process called forms to ensure that the transfer happens from jurisdiction A to jurisdiction B through a mechanism of monitoring, etc., etc. IGST model has put all this is behind our back. Now, when we want a seamless flow of the credit in respect of goods, the tax is paid at the origin and credit is taken at the destination. The value at which the transaction happens, we have set transaction value. We have completely set that valuation, whatever you adopt between that related party transaction, we would not come into question to the transaction value in which you have mutually agreed. It has been working very smoothly for the last 4.5 years. I don't think any audit in any jurisdiction has raised your value is less. No, you have not paid the correct tax, adopting the correct value, etc. When it comes to services, one thing what we have to understand is there is fundamental concept called principle of equivalence between goods and services. The services are very intangible in nature. So when transfer happens, it happens on the intent of the contracting parties. Since they are intangible, whether service get delivered, whether consideration paid, whether consideration part paid, all those things will be borne out by the contractual understanding and agreements entered into between the parties to the transaction. Now, in terms of a service provided by one branch entity to another branch entity, in as much as supply of goods happens, there should not be any problem. In goods also there was no consideration, but still you paid the tax. In services also there was no consideration, but why hesitate in paying tax? In so long as that credit is eligible to you, provided what has been transferred from one distinct person to another distinct person is a service, more so it's a taxable service. I think so far we are all on the same page.
Sure.
Question comes in with regard to those activities some of you consider are not services, some of the authorities may consider as services. One is the services provided by an employee in the course of employment contract to an employer. When Schedule 3 clearly says services provided by an employee in the course of employment contract is neither supply of goods or services, I think all of us should be agreeing to that. The law has been very, very specific and clear and categorical. But we have also said in section 217 in business that a professional outside the scope of employment contract, if he provides services as a professional, it would be still considered as a supply. So some of you must be wondering what is this definition is all about. We have taken pain to explain in our outreach program to say, suppose, let us say Badri is a professional chartered accountant. Let us say he is employed with company A. Now the company A provides remuneration to him in the course of employment contract for which he is assigned specified functions. But let us say that Mr. Badri is also a specialist in transfer pricing. And on transfer pricing, the company wants to consult him outside the scope of employment contract. Using the professional knowledge as a chartered accountant, if Mr. Badri provides a consultancy to the company to which he is employed, but outside the employment contract, if a chartered accountant professionally provides a consultancy service, would he not charge the service tax? Would we not charge the GST? Would not the company be eligible for the credit? Merely because Mr. Badri is an employee. But if the services are provided outside the scope of employment contract, should that not get the same treatment? That's what I said. The issue would be more specific to the facts of the case in which we are going. It's not going to paint one single principle. A cross charge has been much misunderstood. In order to charge, there has to be an expense. An expense cannot exist in vacuum. It has to be in your books of accounts.
Understood.
Right. We need to look at it, but let us be very clear. I think I want to only say distinct person is a necessary concomitant at a subnational level. And we have put a clarification you have seen in terms of the cross-border distinct person, which was the pain point. We have very clearly said if you are legally incorporated and you have your individual identity in the taxing jurisdiction abroad, in a jurisdiction abroad and in India, so long as you're an incorporated entity, we will consider you as a person on a principal to principal, and all those were eligible for export of services benefit. In a domestic, when a transaction happens in goods, we didn't have a problem. In services, we are getting into a problem. But services per se will have to be treated on par with goods. And to that extent, I think we need to work on this. Yes, it's going to add additional compliance burden. As I told you in my introductory remark, the centralized registration of service tax, which you all are comfortable, it cannot work in the subnational taxation system in the given scenario today.
Understood, sir.
So we need to work with that. This is a contentious issues. Probably we will deliberate upon it and more, but there is no need to feel that as if the government is trying to treat this cross-border within subnational level services, even without a consideration, any different from the way in which the goods are being transferred without consideration. In so long as those supplies relate to a supply of goods or services as defined in the CGST or SCST or the IGST Act. I would only remain at this, Badri. The rest, I think we will see how the law gets evolved. It's not only the legislation which makes, it's also the judge-made law is also possible. Right?
Absolutely. Sir, thank you. That was actually, we'll maybe close the session here. That was 2 full hours of loaded interaction. Sir, thank you so much. It is, as usual, as always, wonderful interacting with you, and your comments mean a lot to all of us. It is not because we are speaking with you, but the answers that you give actually clarify. Sir. Thank you so much for that. Thank you very much for taking time out for us. And next time
only one point, there are several issues on which there are fact specific. Maybe I think my replies would not have been to the very sharp level to what the queries expected, but please compile all of them and send it to us. I will take them internally to discuss with my team of the GST policy wing. Look into internally as to what is the resolution, where there are resolutions very specifically to be provided. I'll try to come back, and where there are issues which need to be further deliberated upon, we will take it up further, which is appropriate.
I will certainly do that. I will share a note with you summarizing on this. And sir, one request from you. Next time you're in, do let us know. Would like to do a live interactive session with you.
Today also it's a live interactive session. It's not recorded. I am in Hyderabad today, but I still felt that I think since it was a pre-commitment that I did that I will do this. I will do it from here. In fact, tomorrow's e-invoicing workshop by the Karnataka VAT Department, the boot camp also I'm participating from Hyderabad. I'm always there. In fact, not only for Karnataka, but for that any part. And that's what our Honorable Finance Minister wants us to do, that you see, in the compliance process of tax collection, in as much as the responsibility is on me, I think we also understand and appreciate that the taxpayer in a self-assessment regime need to be given that type of an hand-holding for which we are duty-bound. And that's why I said that these interactions are very, very useful and valuable for me personally, insofar as my job is concerned. The more I understand, the better I can in terms of looking at a solution for them. Thank you. And with that note, I'll end. Badri, thank you once again for organizing this workshop for the benefit of everyone. Thank you.
Thanks. Yeah.